What will the impact of Liberation Day be on financial markets? Today is Liberation Day, as it's been termed by US President Donald Trump. Now, what does that actually mean? Well, it's the day that we should see reciprocal tariffs going in against the US trading partners. Now, there's still some uncertainty as what those tariffs are going to be. There's reports that we could see a tiered approach where we see a 10% and also a 20% tariff placed on certain countries and certain sectors that the US trades with. But there are also rumours that we could see a global blanket approach of a 20% tariff placed on all goods imported into the US. Now, those tariffs are meant to come into place tonight at 4 p.m. Washington time and are due to have immediate effect. So please keep an eye out on tomorrow's video where we'll cover what has actually happened. Now, what we have known with tariffs is that so far they've only been a headline risk, but now what we're starting to see is those headlines feed into actual economic data. And that's what we saw with yesterday's US ISM data. So that's survey data where the firms will reply to the survey and give them an update in terms of what they're seeing. And the headlines that we've pulled from it is that we're seeing inventories moving higher, which basically shows that firms are looking to stockpile inventory before these tariffs come into place. We're seeing prices move higher, and that is firms looking to pass on the cost of those tariff imports that we've spoken about onto the end consumer within the US. And we've also seen new orders fall. So that just reflects the uncertainty around tariffs and firms looking to pull back spending slightly in the face of that uncertainty. And what does this all mean importantly for financial markets? Well, at the open of yesterday, we saw US equity markets move higher until we saw the release of the US ISM data. And on reflection of that, US markets actually posted a negative return on the day. What's important for us, however, though, as multi-asset investors, is we saw fixed income markets respond as we would have expected. So as we've seen more uncertainty come into play and also question marks about the strength of growth, we saw US Treasury yields move lower. So that means the bond prices moved higher. So we've seen bonds act as a diversifier to our equity holdings, which is what we would like to see as multi-asset investors. So that's all for today's video. Please catch us in tomorrow's episode where we'll talk about tariffs.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.